sort of treading water for the week as a whole ahead of earnings, essentially.
We have. So I think you could look at that two ways. One is that we're just holding right near the highs and not really giving back much, even though sentiment is starting to look like it's a little bit, a little comfortable. I wouldn't say necessarily it's over-aggressive. And again, waiting for the earnings inputs. I think today was interesting because the banks kind of rallied slightly ahead of their earnings tomorrow, and some of the stuff that's done well recently backed off just a little bit, like some software stocks.
You know, Stephanie, speaking of IPOs and sort of this tidal wave, we had two companies go public here, smaller companies, two tech companies that went public here today at the stock exchange. PagerDuty finished the day up 59%, and Tufin, small cap, also finished the day up 36%. I guess, how does that add to the conversation right now around stocks, around all these companies going public?
Well, I think since Lyft was not really that successful, at least initially on, you absolutely needed to see some follow-through from some of the other companies. These two stories are really pretty dynamic growth stories, though. Valuations are a little rich for me, but they really are very dynamic. So we'll have to see what happens with Lyft. Let it settle. I've always said it's hard to buy IPOs because you just don't know how the trading action is going to really, what it's really going to do to the stock and the sentiment overall. But I am glad, especially for the capital markets stocks, you have to have some of these deals do well, right? So, and I think that, so it's very much confirmation. But today was a little bit about the macro. We had some very good initial claims data, best since '69. We had a core PPI that was actually pretty good, tame. And then we had Bank of America, the credit card data was released, and it showed a pickup in retail sales spending in March. So that was on the macro. Micro, we had a couple of earnings, Fastenal and LVMH. Those were very good numbers. The real crux of the story comes tomorrow when we have the banks.
And Mike, on that note, how are the banks set up coming into this earnings season?
I think, I think people are kind of fatigued with the story. In other words, I don't think people are there saying they're cheap, they're going to outperform, we have to own them. Therefore, I think expectations are pretty low. I mean, expectations implied by their valuations seems pretty low. So I always think that banks go one way and then the other. In other words, somebody has a good trading quarter and then somebody doesn't. So it's never a consistent story.
Yeah. I mean, I agree with that. The difficulty is now, last quarter we had this already. We had expectations low that were kind of beaten, coming in off underperformance, and yet the last 3 months has still been underperformance. So I don't know whether
it is true,
unless they have a massive blowout beat, which is unlikely, whether the market is kind of really ready to give them that kind of.
It is true. I think right now you'd have to make the case, and I've seen some analysts make the case that effectively the stocks are pricing in a Fed rate cut, which would, in theory, for sentiment reasons, be bearish for the banks. If you don't think they're going to get a Fed cut, then maybe that's the opportunity to own them.